Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond at the Contrarian Trader, and let's get to the pre-market activity. It is at current 4:39 in the a.m. Eastern Standard Time, and we're going to begin with the E-mini futures, and we have the S&P 500 up nearly a quarter percentage point on the morning. We are flirting with taking out yesterday's highs, not quite there yet. The Trip Qs, they are at a new daily high, up this morning, up strong this morning, up 0.41% on the day, looking good. The Dow futures up nearly 0.3% on the morning. You can see we have a little bit of resistance above here, last seen back here last week. So we're flirting with a potential breakout here. The 10-year Treasury note, it is up today, which means that we're seeing a little bit, not a lot of bit, but a little bit of pressure on yields. Keep in mind that we do have the ADP jobs number coming out tomorrow. We also have the government jobs data coming out on Friday that will also measure wages and the average hourly work week. Why is the average hourly work week important? It's because employers will offer overtime prior to hiring a new worker. So it can be viewed as a forward-looking indicator for employment. But unfortunately right now, it'll be viewed negatively by the market because it'll be viewed as inflationary. And if we get a weak jobs data report on Friday, that will be bullish for the markets, because anything that helps the market with their anxiety about yields rising will benefit the market. Now, let's segue into what I think is a bigger story than what is the equity markets, which is gold. This is what I had to say yesterday morning about gold and its correlation with the US dollar. It was a simple observation. I mentioned that it was nothing to trade off of, but here we go. But the dollar overnight, here's where we opened up. Here. We closed off the lows. We had gap down, but we rallied back. But we closed off the lows. I went to bed early, and we since rallied back overnight, and we even flashed a 90 handle before selling off. So that was an interesting event, because what you saw on the gold market was no reaction to that. Gold remained strong. It did not sell off after the dollar rallied up to a 90 handle. That's kind of a tell. I mean, this is only a 4-hour chart, but it's interesting. You want to take that bit of information, file it away, the fact that the price of gold did not sell off while the dollar rallied, and rallied pretty darn strong. But it has since given up those gains, and we are now down slightly. Now, take note of what's setting up here, the potential of what's setting up here. A head and shoulder setup, left shoulder, head, right shoulder forming. Here's our neckline here in blue. So if we break down below that level, in all probability, we're going to break back down into this trading channel, and that sets the stage for a continuation break lower this week. So I mentioned that while it's nothing to trade off of, that observation, what we need to do is act like Sherlock Holmes, right? Trading is not about simply looking at a chart and divining which way the stock is going to go. It's all about taking correlations and inverse correlations, see how they're behaving, and are they behaving historically normal or abnormal? Because when they're acting abnormal, it may mean a trend change. What do I mean? When you take a look yesterday, let's go to a daily chart really quick here. We'll bring up the GDX. This is the gold mining ETF. Daily chart. It was up yesterday with a bullish key reversal, a strong day. But what was also up, it's hard to see here, but the US dollar was up as well. That normally doesn't happen. Normally they trade inversely of each other, but yesterday they traded in tandem. So we had yesterday morning's observation about the rally in the dollar overnight, meaning Sunday night into Monday morning, and no reaction by gold negatively to that rally. And yesterday, the gold mining names traded up with the US dollar. And for the record, gold did pull back yesterday, but it held support. Fast forward to today, where you have gold up and the dollar, back to the 4-hour chart, is down slightly. And I mentioned on that clip from yesterday that we were forming a head and shoulders setup. Left shoulder, head, right shoulder. This is the very same neckline from yesterday. And you can see that we are selling off the highs of the day. Is this anything to trade off of yet? No, absolutely not. We're not going to bet which way the dollar is going to go. We're going to respond to the break or the breakout of the US dollar by adjusting our gold mining positions as well as silver. So that's this morning's observations with regard to the US dollar and the gold and gold mining trades. I think that there are very, very interesting setups developing here. We have seen a lot of pressure on the gold mining names. We are currently long of the gold mining names. Would I encourage people to go buying the gold miners right now? No. Are we at the precipice of doing so? Yes. We have a strategy with members that's been developed, and we will execute on the strategy if and when conditions are right. All right, so let's get to members' stock chart requests. This is where we review the symbols that our members submit for me to review. And we're going to begin where we kind of left off, which is with a US dollar sensitive play. We know that the dollar is under slight pressure on an intraday basis, right? The longer term trend of the dollar is down. What does that help? Well, it helps commodities, but it also helps countries that develop those commodities. Brazil, BRZU. This is a monthly chart. I really want to give the higher level view here. And you can see here that we are in a clear and defined uptrend. We did max out. We topped out back in December at 65.25. We have since gone into a consolidation, and we are beginning to pick up steam yet again. Let's drill down here because this chart is really impressive, and we are poised for what I believe to be a breakout. And if we get that breakout, where do I think we're going? Fairly soon. I think that we're heading up to 84.07 in a heartbeat, immediately following that resistance level. If and when we do clear it, we're going up to 104.14 weekly chart. Now, on a weekly basis, the chart is looking good. We're consolidating nicely. Is it time to buy? Very soon. Members, I'm going to put a note in the Traders Forum with an annotated chart and some direction on where we would look to enter this trade and where we would look to stop out. So go to the Traders Forum. I'll put a note up there with more direction on BRZU because the chart is becoming interesting. We don't want to go jumping in with both feet. However, I think we are very close to a point where we want to begin to build a position, but we do also want to keep an eye on the US dollar because the US dollar could derail any long trade here if the US dollar breaks out. So go check my notes in the Traders Forum. Weight Watchers. A daily chart. As a long, this is not a prospective candidate. As a short, I wouldn't short Weight Watchers until we rallied up to $65 per share, which was support. It'll now act as resistance. Yesterday, we flashed a bearish key reversal, and we did so on volume. So these volume bars here imply that we have institutional distribution, and in all probability, we are going to make lower lows here. So I would not be a buyer of Weight Watchers. Now, what I could see setting up here is that we, if and when we do get a rally, we will rally up to, again, as I mentioned before, prior support, now resistance at $65 per share to $66 per share. And what we might form is a right shoulder because we already have a left shoulder formed here ahead, and I could negatively project out here that we could possibly form a right shoulder, and our neckline would be right about where we're at right now on a closing basis, which was $61.02. If we break down below that level, that'll kill the neckline, taking us back down to what was prior support, which is now declining, and that would put us with a 50 handle on Weight Watchers. Would I short it today? No. I would again wait for the rally up to $65 to $66 per share See if it puts in a lower high at that level. Use a stop right above it, and then lean into the short once we break the neckline on this potential head and shoulders setup. Note the lower high on price. So much for the Oprah effect. This stock is under a considerable amount of pressure. Alibaba, daily chart. Lower highs in RSI, lower highs on price. So we have an indicator validating the price action. We are in a triangle formation. Yesterday we flashed a bullish key reversal on the day off of key support. You know, this is one where, sure, you can go in, scratch the itch, open up a position, use a stop right below last week's lows, and then add on a breakout above this upper band of resistance at, let's call it, 191 per share. Volume yesterday was very low. You're going to want to see that volume rise. We have a cup with handle formation on ultimate oscillator. Watch for a breakout here. This is looking pretty healthy. Caution flag on the track with regard to our Stokes. We know from past experiences that when you get both lines on Stokes trading down below 50, that rallies tend to fade. Let's not forget that lesson. Monster Beverage. A weekly chart here. We had a lot of damage done last week. I believe it was on an earnings report, if memory serves me, from Headline News. We do have a lower high and a confirmed breakdown on price. We are struggling to hold on to the 55.50 level. Where did we close yesterday? 55.74. Now, if we close down below 55.50 this week, we're going to easily come back down and retest the lows of last week. I think that this is a broken stock. Would I short it? Probably not. We're trading above a support level ever slightly. And if you chose to short it because it closed down below this lower band of support, how much money are you going to make? You're going to have support at 52.73. So not enough reward for the risk that you're going to have to accept. Now, if we broke down below 52.73, different story. Then we have a lot of downside room to profit from. But for right now, I think these shares are a watch. The next chart up, 3M, weekly chart. The weekly chart thus far, remember, it's only Tuesday. We have 4 trading days left to go. We are up on the week, up a percentage point, very healthy. The question is, do we close there? We don't know that. Now, the fact that we are at current trading inside of last week's body, meaning no new low, no new high, leads me to believe that, you know what, you could probably take the risk, scratch the itch, put on a very small position. And if we close out the week where we're trading or higher on the week, then you can add to that position. But I would use a stop right below last week's lows, which were right here at 226.33, daily chart. So again, on a daily basis, let's throw some lines up here. We are in a triangle formation. We're putting in higher lows in RSI. No breakout yet. And again, if you wanted to scratch the itch, put on a small position, go for it. Just make sure you're using the stop right below 226.33, because if that breaks, we're going to come back down here and retest the February lows. And the question is, does it hold? And you don't want to be a part of that, right? Keep your stop tight, get out, and let the market dictate where the best risk-reward re-entry point would be. Take note of Stokes. They'll probably close out the day below 50. Again, when you have both lines on Stokes trading down below 50, momentum is not in your favor and rallies tend to fade. Be careful. HTHT, China Lodging Group, weekly chart. We are consolidating at support at 145. A nice bullish key reversal last week. No follow through this week, but I think the shares could be bought. Small opening position with a stop right below 145. Keep that buy small. No breakout yet on any of the indicators. And I would be an aggressive buyer on a close above 160.90. We're holding support on RSI, but that support will probably break if we do not get a rally as soon as today on HTHT. Lower highs on MACD. So keep that buy small and then add more aggressively on a breakout. You have resistance above at 160.90. then more resistance at 166.19. I believe that is an all-time high at the 166 level. Quarterly chart. Yeah. So if you break out above that 166 level and we close there on a weekly basis, you have clear blue skies, no overhead supply, no buyers who've been sitting through the sell-off looking to get made whole. And it allows for the shares to move higher far more easily than when you have overhead supply, which acts as resistance. So HTHT, you can nibble, buy on the breakout. Long story short. Broad Ridge. I went over this one over the weekend. BR the symbol. The financials did well yesterday. We booked profits in FAS. I may go over that in a moment. Now, Broad Ridge was in a bull flag formation. It broke out on Friday. Yesterday, we had a continuation breakout day. I think that these shares can be bought on a new daily high. Volume outstanding. Note how we pulled back yesterday to retest the breakout point, and it rallied off of it. Exactly the behavior that you want to see in a stock. So members, more to come on Broad Ridge. Washington Prime Group. I'm not familiar with the name. So we have a symbol here that is in a long-term downtrend. That has not changed. So if you're entertaining a buy here, you're buying a stock that remains in a downtrend. So a stock like this, I like to draw the analogy of it having to apply for a job. We have 5,000 other stocks out there that we could buy. Why do we want to buy this one? What's the compelling reason? Now, if I were asked that question down here, I would say the compelling reason is that we are at the lower band of the declining downtrend channel. We should expect a rally, which we got. Now, we did break out this week, but the week isn't over yet, above the secondary downtrend line. Now, what this sets the stage for is a rally up and into the upper band of the declining downtrend channel. Now, if you're satisfied with enough profit in between where we closed out yesterday and this upper band of resistance at, let's call it $7.30, that's fine. Put it on as a short-term swing trade, but I would be a seller at resistance because history has shown us that the probability of sellers moving in at this resistance level is very, very high. Now, suppose you're wrong. You sold at resistance and the shares continued the following week up and above the upper band of resistance. So what? You buy the shares back at a dime more, but you're buying them back with the probability of the shares now continuing higher being vastly greater than what it was only a couple of days ago. Now, what I do find encouraging about this chart is that you have both lines on Stokes now trading above the 50 level. That's bullish stuff. Momentum is beginning to pull up. We have a beautiful double bottom setup on Stokes. I talk about this all the time with members. I have people that ask me all the time when they first join, what the heck are you talking about, a double bottom setup? I never heard of it on the stochastics. This is it, double bottom setup. They're far more frequent than infrequent. People are far too accustomed to simply looking at one portion of a W formation or a double bottom setup. You need to look at the entire picture. You had a bigger picture here, W formation. It failed because we were in a downtrend, but you have a history of this stock forming double bottom setups like you did back here. You did it back here. All good stuff. History has repeated itself once again. We're now rallying higher on Stokes. I think there's a very good probability that we rally up and into the upper band of resistance. Do we close above it? That's the big question, right? I don't know that answer. The markets will tell us that. And if we do break out above it, you're not just going to go shooting straight up absent some buyout news or some crazy event, huge earnings beat. You're not just going to go screaming higher out of this downtrend channel. You're going to consolidate and retest. Consolidate and retest. Traders are OCD. They'll want to see whether or not this prior resistance level will now act as support. We see it all the time. So, long story short, how would I trade it? If you're dead set on buying it, I would buy it on a new weekly high. Enjoy the rally up to resistance here at, let's call it the $7.30 level. Perhaps a couple of pennies higher than that. But I would sell into resistance and look to buy it back if A, we close above resistance and retest, or B, we pull back, we put in a higher low, and then we begin to break out once again. That's how I would play it. And that's it for this morning, folks. Thanks for joining in. Members, watch for my notes in the forum regarding BRZU and Broadridge. Everybody have a profitable trading day, and I will talk to you soon. Be well.